So today's Cardinal lesson is a fun one. I kind of enjoy asking people questions about financial planning, Social Security, Medicare, all the stuff we talk about. So, do you pay taxes on your Social Security check? And I get all kinds of answers to that. Is I get a lot of yeses, I get a lot of nos, and the the yeses, I have a follow up question. How much tax do you pay on your Social Security? And very few people can answer that. Okay. They just know that they pay some tax on their Social Security. A lot of them just think it counts as regular income. The no's, when people say, no, I don't pay tax on my Social Security, I don't, isn't it excluded? And they're actually closer to being right than the yeses, because if Social Security is all you got and you don't have another income, you're living just off your Social Security, you're probably not going to pay any income tax, or it's going to be a small amount if you don't have other recognized income. But they've got this pretty complicated formula, which we've put up on the board in different amounts, whether you're an individual, whether you're married filing jointly, that kind of thing. And so we're going to go through that and we're going to show what part of your Social Security is taxable. Before we do that, I want Tom to come on and I want him to just really talk about like why we're doing this video.
Yeah, I think Social Security serves as the base level of income for all the plans we do. It's something that mm, pretty much everybody qualifies at some level. And so we need to know what that is, and we need to know how much you get to keep. The taxes can eat away at what you get to keep from that. And so this is important to know how this works. And so we have the show notes. These are on the link below this video. They're on our website under the show notes area. You can pull it up. We have the board here. We have sort of the formula they use to calculate it. Kind of confusing. We're going to later in the show get into an example because I think that illustrates a little bit better than just looking at these numbers. But you can read more about how they tax Social Security.
Okay, so I'm going to simplify this for everybody. If you have a high income other than Social Security, and then you have two Social Security checks if you're a couple, or you're a single person that has a high income other than Social Security, 85% of your Social Security is going to get taxed. Well, that means that 15% of it was tax free, but 85% of it is going to be subject to taxes. And then you go to the other extreme. If you're a low income person who only has Social Security and just a small amount of money, like $1,000 a month, $500 a month, in addition to your Social Security, you're either going to pay no taxes at all or very little, very small taxes. So you get to keep all of it. And if you're somewhere in between, 50% to 85% of your Social Security is going to be taxed. I mean, I can just give you some general things, but when we do financial planning for people and financial plans, that general understanding is not good enough. And as Tom said, this is the first piece or the core piece of your financial plan for retirement. We need to know exactly how much tax you're paying on Social Security and how much you get to keep. So, what I'd like to do is I have an example. Tom's going to illustrate of a man who lives in Florida where there's no state income tax. And he has a $3,400 a month Social Security check that he's just signing up for, just retiring. And I've been through a number of things with him to where we're coming up with a $3,000 a month income for life, in addition to the $3,400 a month Social Security check. And so it means he's going to have $6,400 a month to live on minus the taxes that he pays. And so what Tom has done for this example is done a mock-up tax return, and he's going to walk you through that right now and show you how much income tax this gentleman's going to pay at 2023 rates. So this hasn't been updated to 2024. So you want to come on, Tom, and do that?
Yeah. And so we have this example. Again, this is very specific to this individual person. So your own example is going to look a little different than this. But like Hans was saying, this is someone who is single. So they're following single tax rates. They live in Florida, which is nice, so we don't have to factor in any state taxes. But we can show. I have this Excel file that I can sort of mock up a tax return. He has $41,000 coming in from Social Security. That's before any taxes or any deductions are taken out, and he has $36,000 coming in from IRA. So that's 3,000 a month. And so the software can run through and do the formula that we had on the board. I will point out that it's not a cliff. So if you are a single person and you earn just above the 34,000, which this particular person does, it's not all of a sudden 85% is taxable. It gets phased in over time. So it's somewhat complicated. But in his scenario, 23,625 of his Social Security of the 41,000 is taxable. So he gets about half of his Social Security tax free, half of it he has to pay taxes on. And so we add that number to his IRA distributions. He has a total income, an adjusted gross income of just under $60,000, 59,625. He gets to take the standard deduction. And again, this is in 2023. For 2024, this will look a little better, but that's $15,700. You get to subtract that out from the gross income of the almost 60,000. And then you go to the tax rates, you do all the tax, marginal tax rates. Some is 10%, some is 12%, 15%, how that works. All said and done, he's paying $5,000, just a little over $5,000 in taxes on, essentially $77,000 of gross income. So he gets about $6,400 a month of income. After taxes, he gets to keep 6,000 of that income that he can spend every month, and knowing that's going to come in the next month. So this was just a really sweet deal. He pays very little taxes on this total income. And then again, there's everyone's situation is different, but this just illustrates how that formula works, how not all of your Social Security can be taxable. To Hans's point, if I threw in, $100,000 of IRA distributions, 85% of his check would be taxable. If I remove the IRA distributions, none of it would be taxable. So it gets phased in. And actually, maybe I'll do that just real time here. And so let me just remove the IRA distribution just to illustrate the point. As we go to the tax return, his only income is 41,000, and none of it is taxable, right? So he pays no taxes if all he has is Social Security. And this just speaks to the idea where we're doing with a lot of planning, where we have people where we might recommend they delay Social Security till 70 so they get the higher check. And we do Roth conversions in the meantime. Because if you have Roth IRA, that money coming out of the Roth IRA does not add to your taxable income at all. And so you could have potentially a really high income and still pay very little tax to no tax, depending on how we set things up. So this just illustrates how we use this to do some of the planning we do.
Okay, so the 11 states, what's over here, these are the states that also, they have, first of all, have to have an income tax in the state. And these 11 states have an income tax, and they do count Social Security as income. Now, they got all different formulas. Some have bigger exclusion amounts. So I'm not going to get down into that. But if you're from one of these states and you call us, we're going to include this in an example like we just did for the gentleman in Florida. So just so you'll know, these 11 states tax Social Security in addition to the federal government. So, like I said, the moral of the story is that if you're a high income person and you've got a lot of money coming out of your IRA to live and other savings that's taxable, you're going to pay taxes on most of your Social Security, but 15% of it is going to be tax free. And the other extreme he just showed you is if you're just living off of Social Security and nothing else, or just a little bit of something else, you're not going to pay much, if any, taxes at all. So what I want to do is show how this fits in our whole planning. Is we do this Social Security exercise for everybody that comes through the door. I mean, we do, because most everybody has a Social Security check. And a lot of folks, when they're younger, they say, oh, well, it's Social Security, But you talk to those same people when they're 70 and they're getting a Social Security check. That Social Security check, even if you have a lot of other money, is still important to you. And the taxation on it is important to you. So in comprehensive financial planning, we've talked today about Social Security. We talked about 401k IRA, because that's where, for a lot of people, the other taxable income comes from. We've talked about income, and then, of course, we've talked about income taxes. So I want to bring Tom back on. I'm Hans Scheil,
And I'm Tom Griffith.
and we thank you very much for listening to us today.
Thank you.